Okay, now we're going. All right, guys. For the first part, we were just mainly discussing, kind of what we had done and any questions. But what I want to do is actually get into at this point um, what they really are, the differences between each specific type, the differences in what each one does, how each one functions. Um, as I said, sole proprietorship, partnership, S corp, and C corp. Those are the main ones. Okay. There's the LLCs, there are farms, there are nonprofits, there's a whole bunch of other littler ones, but those four are the biggest ones. They advanced based on a progression. We started as a sole proprietorship, discovered that we have other needs, made the C Corps, made the S Corps, partnerships. As we found need, we started to expand it. And what I'm going to do is I want to focus on them kind of in their progression. As you can see, a sole proprietorship is the one-person version. And let me do this quick. Let me share this with you quick. There we go. There we go. The sole proprietorship is the one-person version, and then you have the two-person small group kind of partnership version. Then it starts growing into larger entities, C corps, S corps, and then we have the branch offs, which are our specialty ones. Like farming is really a sole proprietorship in a lot of ways, just in a specific area. LLCs are, in a sense, like Sheila was talking about earlier. Sole proprietorship is basically an LLC is basically a sole proprietorship in a sense with an EIN. So it kind of has its own business. It's kind of how it functions. But you can see kind of the progression. It's based a lot of times on the number of people in it, how big it is, and then what the tax benefits are. And we were talking about earlier when we were talking about, you saw the example, and I'm going to go over it again a little bit later when we talk about C Corps and S Corps, what the double taxation effect is and what the pass-through effect is. And that's later on. But for right now, what I want to focus on is our sole proprietorship one. And then we're going to kind of branch into, because it leads naturally into partnerships. To start, we're going to try to learn about their structure, their function, and each one has unique benefits. They also will function a little bit differently because they have different tax needs, they have different tax forms, and once you start getting into the taxation, actually doing a tax return for them, you'll discover each one has its own tax return. The individual, the sole proprietorship, uses the 1040 and the individual tax return. Then you start getting into a partnership, you get a 1065, which is really just the reporting, which then kind of goes to your individual for the partnership. They kind of talk to each other, and that's one of the important things you have to learn. The individual, and that an individual, everything is just me. Okay, with a business, it's me and how I talk to the other me's. Okay, how I actually speak from me as an individual to me as a corporation, and how that corporation talks to me and tells me what I get from it and what I did from it. That's one of the big differences between just an individual doing something as a sole proprietorship and when you have things like pass-through income, how it comes to you, things like the K1 reporting and things where it's showing the business has this and it is now passing it through to this individual, or dividends are paid here, or shareholders are doing this and reporting this. That's one of the only major differences between what you've done as an individual tax return is everything is just you and nothing is really how you interact with the other ones. because there's no real rules. You just get your W-2s and your 1099s, and in a sense, everything is just that. Okay, that's your total communication with the outside world is your 1099s, your W-2s, and it's just how I did that. With business, I'm trying to think of the best way to explain this. With business, it's how I relate and how I speak between the C Corp, the S Corp, the sole proprietorship, the partnerships, and how they talk. Because later on, you're going to learn something like, when I say a partnership, here's the first question. Who can be, and this is one for you guys, I'd like you guys to try to answer this one. Who can be a partner?
Any entity can be a partner.
That one was awesome, that answer. What does that mean, though? Somebody other than you, Sheila.
Okay.
Somebody other than you. Somebody other than you. Naomi or Garrett, one of you guys.
Any individual.
And any individual, keep going. What else?
My dog.
Your dog. Well,
my
I
dog,
guess,
my partner.
I guess technically, yes, and that is, believe it or not, one of the things in real estate that they actually say on a contract, put on there, conditional based upon approval of my partner. And he goes, your partner can be your dog. You know, it's like you can go in there, but it's a clause which says, I went home and had a talk with my dog, and my dog told me not to buy it. You know, it's like, so in a sense, yes, your dog can be your partner. But let's, realistically, who can be your partner? Who can be a partner? There's a key thing kind of that I'm looking for, and I don't want Sheila to say it because I think she already knows. Because she already said any entity could be a partner. What does that mean?
Well, another business could be a partner.
Aha, thank you. That's what I was looking for.
Okay.
So, I own 50% of Widget Incorporated. Okay. I've started this business and I sold off, or I made a partner. I formed a partnership with another partner. You know who that partner would be? Who that partner can be, I should say. Who that partner can be? Who could it be? You said any entity.
Yeah, it could be, you're doing widgets, you own the widget company, whoever supplies you with your
My
resources
supplier,
to
the
make
widgets,
your
resources. There you go. That's a good example. Okay. How about, okay, I'm partnered with Microsoft. Really? Your partner is Microsoft? Yep, it can do that. What ends up happening is, remember, any partner, your partner doesn't have to be a person. It can be a business. It can be a C corporation. It can be huge. You can be partnered with Procter & Gamble, Microsoft, Wendy's, who knows? You know, I make great hamburgers, and I partnered with Wendy's for our branch of the business, which makes these perfect onions for hamburgers. Who knows? Okay. Now, my partner can be something like Wendy's Incorporated. Okay, it does not need to be something, we think of partners, we think of Bob and Ryan are partners.
Yeah, I thought it is just two person.
That's important. That's what I was looking for. When I say this, and this is why, let's go into our key terms. Individual and business entity. Remember, Sheila, you nailed it when you first said it. That you did awesome. You said any entity. Any entity can be your partner. And Garrett, yes, I suppose your dog could be. I don't know where it has a social
dog's an
security
entity,
number.
it's an individual.
Yeah. I don't know where it has its social security number, but
Yeah.
that would be a little more difficult to file. But
Get him an EIN.
business entity.
He has an EIN number, yeah.
He has an EIN number. Get an EIN number for your dog. But you can be partnered. When we think about a partnership, we think about a partnership as Bob and Ryan. It doesn't need to be that, though. It can be any entity. You could be partnered with a large corporation. It can be a corporation. It could be Sheila's Nails joins together with Garrett's hair cutting, and they form a partnership, which is two businesses which join together and have a spa between the two of them. Who knows? Yeah. Okay, and that's two corporations which own a third corporation. Is there a person involved? Not a single one. But there is a partnership there. And they can have a legal partnership, and they can have all the different views and all the different types. It can be a pass-through to them. It can be whatever, and we can specify that. We'll get into it a little bit more, but like you said, Naomi, most people think of it as two people. Partnership, we always think of it as, a couple people get together and form this business. And in most cases, yes, that is true. That is basically how it normally forms. But in realistic terms, it can be any entity can be your partner. And I know that seems a little different when you think about it, but hey, it's very real. Two corporations can form a partnership. They can merge together and form a third one. Actually, when you think about it, I'm trying to think of some of the mergers where this has occurred. When they talk about mergers, a lot of times, like right now, we were talking earlier, Boost, T-Mobile, and Sprint.
Yep.
All coming together. That's three corporations. Now, what's going to happen is they'll probably come under a partnership company. They're not going to basically, typically, now I'm not saying I don't know quite how they're structuring it, but I'm saying it as an example. T-Mobile is probably not going to explode, and Boost explode, and Sprint explode, and all of them will come together as Boost Mobile, whatever, T-Booster, whatever I want to call it, as a new company. What will end up happening is they'll all be the same company, or the same as they are now, just partners under a partnership. So when we think of the sole proprietorship, we think of one person, and when we think of a partnership, we're thinking about what we usually think of as just two people, but it's not. A partnership can be between any entities. Is that one pretty clear?
Mhm.
In that sense? That it's like, it doesn't require it to be people. It can be businesses. And Garrett, I suppose, like I said, we'll get an EIN number for your dog. I got mine running around here. Taco's around here somewhere. I have a little Chihuahua. Noemi's seen him. I have my little Chihuahua around here, and his name's Taco Bell. He was a rescue dog. And yes, I would put him in business. He could be my little example.
Okay, so Jackson Hewitt is owned by Tax Service of America.
There you go.
So is that one corporation that's owned by another corporation?
Yes, it is. We're actually, technically our structures were a franchise. That's a little bit different. Jackson Hewitt, the way it really works is Jackson Hewitt almost doesn't exist anymore in that sense.
Uh-huh.
Jackson Hewitt is actually the smaller business. You got Tax Services America owns Jackson Hewitt. Okay.
Mhm.
And all of these businesses are branches of Jackson Hewitt, which are overall owned by Tax Services of America. So that's technically how it works.
Okay, franchises.
Yeah.
Took the lid off that can of worms.
Yeah, we're not going to hang on to that one.
Is that a pass-through or a...
A franchise, like you can buy a McDonald's franchise for $1 million.
Yes, you can. Yes, you can buy it.
So that's a franchise.
It's a franchise.
McDonald's is a corporation.
Yes.
You're
Actually, hey,
corporation?
here, most people don't know this. Ray Kroc years ago was asked. He was actually doing a speech at a college, and it was kind of a famous thing as he was doing a speech at a college. And after the speech, he actually was sitting there having lunch and kind of talking around with a bunch of the students. And he asked them a simple question. He goes, "So, what do I do? What business do I do?" And everybody kind of laughed about it and said, "Well, you make hamburgers, you know?" And he goes, "Not even close." He goes, "I'm in real estate." And they were like, "Wait a minute, what?" You know, McDonald's is the second largest real estate owner of property in the world, second only to the Vatican, believe it or not.
Wow.
The reason is, you see, McDonald's um, does not own the McDonald's. Those McDonald's stores that are on top are owned by the franchisee. Okay. What McDonald's corporate owns, the corporate one in Oak Brook, I know because it used to be great. One of my friends owns Oak Brook Limousine, where the McDonald's lodge is, and he services the actual lodge. So I actually got to go to the lodge a couple of times. It was great. You know, so you go to the McDonald's corporate headquarters, like bigger than Nike. You know, it's like, so the McDonald's itself does not own. Here's the land that the McDonald's store sits on. That is owned by corporate McDonald's. Okay, they go out and they send out realtors. Their people are not hamburger people. Their people are realtors. And they go out and they buy land in growth areas. Corporate McDonald's owns that land. What they do then is, to their franchisees, they sell the store top, the name, and access to their food products. That's the franchisee part that they sell. They lease the land the McDonald's is setting on to the franchisee. So what ends up happening is corporate McDonald's doesn't make hamburgers. They have a production facility that makes food products and just sets it out there. And they have the name McDonald's, which they also sell to the franchisee. But the one part that they own is the land that all the McDonald's set on.
Mm.
And that's actually how McDonald's, Ray Kroc goes, "I'm a realtor." He goes, "I sell real estate." And most people don't know that. The McDonald's biggest asset is the land that the McDonald's set on, that the actual owners of the franchisee own from the ground up.
Hmm.
They lease the dirt that they're setting on, owned by McDonald's.
That's the same
So
with
they pay a
Jackson
lease
Hewitt?
and a franchise fee to
And a
McDonald's.
franchise fee for the name. Correct.
Yeah.
There you go.
Right. So
So-
Jackson Hewitt is a franchise.
Yes. Yes.
Is
Jackson
it
is.
the same situation that you're?
They don't own. They usually don't own the land or anything like that. They just have. They lease a space and they put the name on it and use the space with the name Jackson Hewitt.
So let's say that I bought a franchise, a
Mhm.
Jackson Hewitt franchise.
Right.
So I would be owning what?
You would basically own the rights to use the name Jackson Hewitt, access to the software to process all the taxes, access to the marketing that they have, access to their procedural stuff, their training school, that sort of thing. Basically everything that makes it function, and the name and the marketing. Location-wise, you would determine and lease the space that it's in. We sell you the signs, we sell you the computers, we sell you the software. You have a fee for it at the time, and then we service it and that sort of thing from corporate.
Okay.
So that's what you're getting with the franchisee. with the franchise. So you're getting those parts to function like a Jackson Hewitt.
Okay.
Okay, so that's kind of how it works, and that's actually how most franchise work. Is like if you get, uh, um, God, what am I thinking of? Like Kentucky Fried Chicken, Taco Bell, any of those. They work the same basic way. You get to use their products, and they actually, part of the agreement is when you buy the franchise that you are tied into their specific products. You become a dealer for them, if you want to think about it that way.
Okay.
So that's kind of how a franchise works.
Now, if I'm a franchise owner,
Mhm.
am I a corporation or am I an LLC? What am I?
You can set that up. Remember, this is your asset, so you can set that up how you want.
I see.
Do I want to be a sole proprietorship and own it? Probably not, but because if somebody gets hurt at it, then you can get directly sued for what happens in your store. But yeah, you can set up, that's your business, so you can run it as an LLC, run it as a partnership, run it as,
Got it.
in that sense. So you will be running and agreeing to the function of this entity, this franchise. Okay.
Mm-hmm.
What happens in this building. And that's kind of how a franchise works. Now, it is different, like I said, than a business entity in that sense, because when they say you're buying a franchise, you're buying an asset. Okay. The LLC or partnership or whatever owns that franchise asset.
Okay.
So it's not a business entity in itself. A lot of them, like I know here, I'm trying to think where all they own it. I think it's both in Vancouver and Portland. I think the family is the Dickerson family. I can't remember. Owns a whole bunch of the McDonald's, Taco Bell, A&W, and I can't remember. And I think I can't remember which ones exactly, but they own a bunch of them, and I think they call it North Star Restaurants or something like that.
Oh, yeah, I'm familiar with them.
Yeah, they actually own a number of them, and their business is North Star Restaurants, basically, and their assets are or how they structure it. I'm not sure exactly how they structured it, but because it may be that each one's its own entity. They started their own business and put it into it, and then North Star can own. Let's do that. Let me talk one thing first before we talk about this. Let me talk about a kind of a structure here. I know that this will be a little bit different because it's a little odd, but one of the things that is sometimes a little more difficult to understand is when I talked about how corporations talk. Here's what I mean by talk, I guess you could say. Let's just use this one, and I'm not sure how it's structured because we're just going to use it kind of as an example. Let's just say that here is Ryan's Restaurants.
Mm-hmm.
Okay. This is my head business. I decide for whatever reason I want to make it an S corp. Okay. I don't want this to pay taxes, but I want all the profits. We saw about the profit issue. Okay. So
Right.
this, now if we thought about it, well, we have burger joint here. We have taco joint here. We have pizza joint here. And we have bar over here. Okay. In this structure, this is an asset. These are assets of this company, right?
Right.
Now, what does that mean? Mike is going over here and goes over and he eats a taco and accidentally somebody broke a glass and it fell into the taco meat, and Mike eats a taco that has some glass in it, and his mouth gets all cut up. So there is a lawsuit. Okay. Mike sues us because he got injured, right?
Mm-hmm.
Now, what happens? What are my possible losses if I think about this? What are my possible losses?
Well, none, assuming you have insurance and you're a limited liability
Well,
corporation.
no, I mean, let's say he sues me for $100 million and for whatever reason, he's winning. Somebody
Then-
intentionally did it. Somebody actually said, yeah, I hate this guy. I'm just going to break a glass and, whatever.
Mhm.
So they show neglect, or they knew glass was in it, or whatever, and so the lawsuit's going to go through. What can I lose?
Your assets.
Now, what are
Lose
the
your whole
assets in this
business.
case? Thank you, Garrett. That was important. So with that in mind, what can I lose?
Well, whatever assets the corporation has.
That's right. This is an asset of this corporation. This is an asset of this corporation. So what happens is this taco company is getting sued. This taco store, which is my asset, is getting sued. It's an asset of this corporation, and this corporation is technically what's getting sued, right? Because it's the owner. And that means I can lose this one because it's an asset of it. I can lose this one. I can lose this one. I could lose every one of these assets. If this guy sues me for $100 million is winning, guess what? I just lost that.
Uh-huh.
Sheila started to see where I'm going with this. Didn't she? I just heard that aha.
Yeah.
Okay. Now, we're going to do this a little bit differently now. Here's Ryan's Restaurants. My S Corp. Now, that S Corp, now here's, right back to where it was, my burgers, my tacos, my pizza, and my bar.
If you want all that, you gotta invest in a marijuana store too. So
Okay, we can put a marijuana store too, but anyway, looking at this,
because that'll drive
Wow.
customers, So
you just saw the amount that I could lose. But now instead, I have here. Whoop! I didn't mean to do that one. I meant to do this, this, and this. And here I'm going to create Burger Corp.
So that's your shell corp.
Thank you. Taco Corp. Pizza Corp. And Bar Corp. Now, this is the asset of Bar Corp. This is the asset of Pizza Corp. This is or Taco Corp. This is of Pizza Corp. And this is the asset of Bar Corp. And these can be structured differently. These can be an LLC, which is fine, whatever they are, because this can be an LLC. This is an entity owning this asset. Now, we came back, same situation, because this is the asset here, this is the asset here, this is all the assets here, and this is all the assets here, but I own and control this asset. Okay, that's important. I own and control this asset. Now, what happens is when Mike comes along again, let's go in here, and here's Mike, and he is going to sue me for my glass and my taco. And he comes here and he gets his glass and his taco, and who does Mike get to sue?
Taco Corp.
Corporation.
Aha, you are so good, Garrett. Mike gets to sue Taco Corp. Now, what does that mean I can lose? Taco
Tacos.
Corp and all of the assets of Taco Corp. So guess what I can lose?
Just the one. Yeah.
Just the one.
Just the one. Now, that's how you protect assets. Because in the first one, because I had it under here, under the S Corp, and they were the assets of this, all assets were tied together. Because they were all my assets under here.
Mm-hmm.
This way, this is the asset of this corporation, and this is the asset of this corporation. And I can structure these so I get the pass-through benefits here. I can just pass through to here. If I make this an S Corp, okay, or however I want to do it. So this pays no taxes, right? So all the taxes end up here. And I can structure this however I want, right? I can make this a C Corp if I wanted to. If I don't know why I would or whatever. But this can pass through, so it has no tax liability. Make these an S Corp. It just passes it through and owned by this. So, again, now, what happens with my liability issue? Didn't I just save? Didn't I just save 3 companies?
Yes.
This is how you shield yourself, especially like if you're in real estate. Let's do it this way. Instead of burgers, I'm a real estate investor. I have rental properties. I now have 4 houses instead of my burgers. I have 4 houses. I structure it like the first one, where this is my asset here, and this is my asset here, and this is my asset here. What does that mean? Mike comes along this time and he trips in my rental or whatever happens. What can I lose in the first example?
All your property.
Property. Your house.
All 4 houses in the first example.
Oh, okay.
If I put them here, this is house 1 Corp, house 2 Corp, house 3 Corp, house 4 Corp. Mike comes along, breaks his leg, falls, whatever, in this house. What can I lose?
House number 1.
Just house number 1. I get all the benefits of it, but house 2, 3, and 4 are shielded. And that is, in real estate, that is probably one of the most important things, and most real estate investors do not know how to structure their real estate this way. And you have people in your regular people who, right now, you talk to somebody and you go, I've got 2 rental properties, right? How do most of them, let's go realistically. And remember, we're talking about a sole proprietorship here. Sheila.
Yes.
Any of your people have more than 1 rental property?
No, I don't. My clients they don't do that.
Okay, well, okay, anybody. Any of your people you've ever dealt with
Oh, yeah.
have more than 1 rental property?
I had one that had 7.
There you go. 7's a good number. Let's just go 4, whatever.
And I think she did it as an LLC. And she had all the properties under 1.
Ah, yes. Did you hear what I just said? Nah. And she did it as an LLC. So, house 1, Mike comes along. Because they are now assets, all of that LLC, right? Of the same LLC.
Mm-hmm.
Mike comes along, breaks his leg in house number 1. Whatever happens, he sues the LLC that owns it. And what can that LLC lose?
Everything.
That. Pretty bad when you think about it in those terms, isn't it?
Oh, yeah.
Most real estate investors do not know even how to shield themselves against something like this. Because if you don't put these in an individual corp, remember, you sue the owning corporation. You sue the owning entity of the asset, if you want to put it in those terms. So if this is the owning asset, owning entity of all of these assets, and something happens at this asset, this is at risk. Okay? Pretty bad when you think about it in those terms, isn't it?
Mm-hmm.
So the first thing that you would have the advantage of, your person who comes in, advise them, guys, I know this sounds like it's extra, but if you use that as an example, remember we talk about one of the questions is, did they give you advice about next year? That's one, remember one of the survey questions?
Right.
Explain that little thing to them. Go, okay, you have this, you have, somebody who has 3 rental properties, two rental properties is all you need. Even one, here's a better one. And this is again against a sole proprietor. Mike comes along and breaks his leg. What is at risk to this?
Well,
If this is an asset and they don't set it up as a separate business, what's at risk?
the sole prop could lose everything.
Thank you. This is his rental, right?
Right.
What does that usually mean?
Source of income.
Well, I mean, everything that the guy owns,
Thank you.
all of his assets, his bank account, his house, his
Home.
whatever.
Yeah, his own home is
Because if this is a rental property and he's just got it under him, and this is a person with just, and how many of you, raise your hand if you've ever had a person who actually has a rental property? Okay, just a rental property. I'm not talking about multiple ones.
yeah.
A rental property. It is your asset when you're a sole proprietor. Okay, that's how it works. There you go, Sheila. It is your asset. That's officially what it's considered. Mike comes along and breaks his leg. Whatever happens. He sues the owner of this asset. Okay, because that's the way this works in the eyes of the law, by the way. And he sues them for $10 million or whatever it may be, because remember, we sue for everything we can possibly get nowadays. So he sues the owner of the asset. Who's the owner of the asset?
The sole prop.
Proprietor.
What are the assets of that sole proprietor?
Well, his rental and everything else that he owns.
You are so good, Sheila. You are so good. You know that?
Because as a sole proprietor, he's 100% liable, and it goes back to all his own stuff. He's not.
Yep.
He's not protected at all.
Exactly. So what ends up happening is he thinks that, well, this is my rental property. I mean, the most I could really lose is the rental property, right?
Oh, no.
Wrong answer.
And you don't know how many people lose stuff this way, because I'm just talking about a rental property, and you know how many times, especially when houses were being foreclosed on and things like that, a lot of people couldn't sell them. So what did they do? They just threw up a for rent sign on that second house, and they turned it into a rental property. And they're still in existence as a rental property, even from back from 2008 now. And they never structured them. So when something happens, remember, they own technically how many houses?
One.
How many houses does this sole proprietor actually own?
2.
Well, the one he's sitting in, I assume, plus his rental.
There you go. He owns 2 houses. And in the eyes of the law, he has 2 assets, 2 home assets, two house assets in that sense. Plus any cars he has, any stock he has, any bank accounts he has. Oh, sorry, I forgot about the important one. Any retirement funds he has. 401ks, anything like that, annuities, anything of that nature, also are considered his assets. So when you think about this, because most people don't even pay attention to it, you've been working, you wanted to save for your family, and especially, I mean, a lot of people who have rental properties are not real estate investors. They inherited a house from their dad, their mom, whatever. They got a house, and they didn't know how to structure it. So they got the house, they decide, okay, let's rent it out, and see, maybe we can keep it as a rental property or whatever. And so they start doing it as a rental property. They're going to work every day. They work. They have their 401k that they're getting funds for, that's being paid into, all that. They have a normal life. Like I said, then Mike comes along, and it's been 10 years later that they inherited it. Mike breaks his leg. When Mike breaks his leg and sues that sole proprietor, the guy who has this rental property, he just inherited it from his dad. He wasn't thinking about structuring it as a business. That's fatal almost, because this guy can now sue him for all of this, including his 401ks, because there are all that stuff he's been working for all these years that he just was thinking about. I'm trying to save up for my family. I got so much in the savings. I got about $10,000 in stock. I got like $50,000 in a 401k. Oh, and there's an important one I didn't kind of put up here because most people forget about it because of what it is. Life insurance. Most life insurance policies now are a universal, they're basically a savings account. They are another version of, in a sense, you think about it like a 401k. Most life insurance plans are now a long-term savings policy. So, isn't that a cool list to go after? I'm Mike, I broke my leg. God, man, you forgot you didn't do the maintenance on this walkway. It's because of you that I now have this injury. I am suing your butt. And you have assets. I am going after them. Guess what all that includes? I can see a whole chunk of money. Anybody else see a chunk of money there?
Well, you better have really good insurance. That's for one thing.
Oh yeah. Well, and that's one of the shields, but we're just talking about the business entities. Okay. So that's, you just got killed over this. He took your entire life because of something that you didn't think to structure it the right way.
Right.
Now we'll do the same thing. The sole proprietor does this. Here's house one. Here's his home and all this, right? And remember something. I can be, and here's something that most people don't think about, and it's, I don't know why people don't think about it. What are the tax benefits of a corporation? Anybody? What are a lot of, okay, let me put it in a different way. What are a lot of the benefits of a corporation that a person doesn't have? What's one of the most important ones in regards to taxes?
Corporate rate?
Claim expenses.
Oh, I love you, Garrett. Okay, how does a business work?
Has
How does a
income
business?
and has expenditures for
Now, why is that different
creating
than?
income.
Why is that different than me? Not me incorporated. Me.
Because you don't get to claim your living
Yeah, no
expenses.
expenses.
You don't get to deduct those.
Thank
on your
you.
tax.
So what ends up happening? Okay, here's me. I have income
Mm-hmm.
from work.
But on that W-2, you can't claim any expenses.
Exactly. So what happens is this. I get taxed, and then I get to spend it after the tax, and I don't get any benefit, do I?
No.
That sucks.
Mm-hmm.
I don't get any benefit. So me makes me Inc. And for your work, your business, me Inc., charges your work for the services that you perform.
Mm-hmm.
Work now has income, right? But what's the difference about this to this?
You ain't get to deduct expenses for the
For
business part of it. Yeah.
the work income.
What's the difference between these two?
Income in the 1099. Is that what you're asking?
Pretty much.
1099
Or
for independent,
1099.
like independent contractors. Is that what you're getting at?
Or this is also just income as an expense for this work, and not even a 1099. You just get a receipt for it. However it works, however you're doing your income. And then what happens? You have what against it?
Expenses against
Expenses.
What can your expenses be?
Anything that it costs you to do the work.
Oh, Sheila, you are so good. Shall I keep going?
All the stuff that you would normally deduct on a business.
There you go. A lot of the things that you pay for here after taxes out of this money, if it goes this way, you get the same things. You get to use them the same way, basically. But Me Inc. gets to take them off of what?
taxes.
The gross income.
Gross income, yeah.
So now what do you pay tax on?
Your net income after
Yeah.
expenses.
Which would you rather do?
B.
Yeah.
Me Inc. It's like, think about it. Can your business get you a car for work?
Technically, yeah.
There you go. Can your business get you a cell phone?
Yes.
Can your business buy you a computer?
Mm-hmm. Sure.
Can it buy you furniture for your office?
Yep.
Can it pay for your internet?
Of course.
You can even put your home office in your office in your home.
Exactly.
That part of your home.
There you go.
Your taxes depreciated. So
There you go. So, what? Now you've just you've got a car, computer, phone. By the way, how much do people spend on a phone a month?
anywhere from $50 to $100 usually.
Just on their phone.
Hmm.
And how much do they spend themselves versus the business?
Well, that would be their whole expense. They would pay the whole thing.
There you go. They pay the whole thing, and that's after they've already paid the taxes on the money,
Hmm.
versus the money comes to them, they spend it on the phone, and they pay taxes on what's left.
Right.
What if there's nothing left?
Then you don't pay any taxes.
Now, does that mean it's worth a whole lot more to be Me Inc. than me?
Yep.
Yeah.
There you
So,
go.
in my case, my LLC could be a subsidiary of Me
There you go. There's Me Sole Proprietorship, which owns Me Inc.
Inc.
Sheila Inc.
Sheila Inc.
Inc. Right.
And Sheila Inc. owns the LLC for your bookkeeper business. And
Right. Exactly.
Do you want to know? I actually have a friend who does not use her actual name. Do you know why?
Most people don't.
Well, no, I mean, but there's an actual legal reason why she doesn't. Remember when I said there's Me Sole Proprietorship and Me Inc. Because she set up an LLC as Cecilia. Her name is Sarah, and she set up an LLC as Celia with a last name, and everything she does is under Celia. Because it's the corporate name, she can use that as the name because that's who she's representing as the corporation. Everywhere she goes in business, she's basically using a different name. It's the same thing that actors do in a sense.
Well, doctors do too.
Yeah, doctors do too. And what ends up happening is she can actually sign that as a representative of the company.
Hmm.
And so she goes around, she has business cards with that as her name because she is representing that company. And she owns it. She personally, as a sole proprietorship, owns the LLC. So think about that, guys. Wouldn't that, how much do you pay in taxes again versus how much could you pay in taxes?
Hmm.
And what is the biggest thing about that that's really important? We were talking about protection.
Well, yeah, because you don't. Okay, so they're separate entities. So their only exposure is the entity itself.
You are getting it, girl. Oh man, did you hear that, Garrett?
I did. So
And
what's
she even put it in awesome terms. The only risk is the entity itself.
whatever that entity has ownership over? Yeah. So.
Correct. Whatever its assets are. So the first thing you do is you always put all of your stuff. It can have just one thing in it. Is it worth the filing fee of what, $100 or whatever to protect a house? I mean, let's do the math. It's like, would you prefer that the house be protected or what?
Oh yeah.
Definitely the house. And
Most of the time, you can file most of these things online, by the way.
Well, of course, that's what I did.
How does that differ from like a living trust
No, that's a whole lot
or
different.
state? Okay.
That's a whole nother kettle of fish.
That's a whole nother category we'll cover towards the end.
Okay.
That's like a whole different ghost. Okay, yeah, that is the sole proprietorship that lives on. Okay, it has its own set of rules, Garrett. Really, we'll cover that in detail. But
Sure.
trusts and estates and all are, they are consider, I don't know how to put it in simple terms, is you've got a sole proprietorship. The owner of that sole proprietorship, which is me, dies. But the assets and everything of the sole proprietorship and the intent of it still lives. So now that ghost of me goes on as a trust. Is that pretty close to a simple example, I think?
Yeah.
Yeah.
Okay. I was trying to make it pretty simple, but we'll cover it in detail. But in a sense, that's what it does. It carries on, and another person, a trustee, comes in and stands in for you. You trust them to handle it, and that's a trust account. Okay. Somebody, once you pass on, or once something happens to you, or something is happening to you, because a living trust means you're still alive, but you're not in control of it. Somebody else is in control of what's happening, and a lot of people who are terminally ill have a living trust. They
We're
are
not
trusted.
terminally ill. In the case,
Oh yeah.
like I had living trusts at Merrill Lynch that had assets in them.
There you go. Yeah. I was using that as the biggest example I meant.
Yeah.
But it's
So-
while you're still alive, things are being controlled, but you no longer, in a sense. Now, here's the important part: you are giving up you are specifying what you're giving up control-wise that somebody else is going to now handle.
True.
Okay.
Trustee.
So in terms of like the corporate structure, like the spider web you got going on here on your whiteboard with individual sole proprietorship.
I like that. This is the Spider-Man approach to business. I like that, Gary. That was cool.
Well, because you think about it, a spider web, the way they're set up, it's each thing is sectioned off individually, and so it's the same type of deal with the
That really is.
corporation. If the sole proprietor dies, does everything else then flush that is owned through that, or
Don't remember there.
No, it's a corporation, so it doesn't stop at death.
just a sole proprietorship or any LLC connected with that might die, but potentially, because LLCs, from what I understand, are pretty much a sole proprietorship anyway. But the corporation,
yeah, kind of, but the LLCs do kind of carry on, but we'll get into that in detail.
True. Yeah.
In a sense, you're right. That chunk dies. Okay, yeah, that branch dies off, but the others still keep going.
Okay.
So yeah, in a broad sense, that's I like that, the Spider-Man version of business. I like that. It's like I can get into that version, but the Spider-Man approach to business. That sounds like a title of a cool book. It's like, so really, do you understand the benefits that right now, what you've just picked up, what I've told you,
Yeah.
what you could take to your clients?
So we don't really do corporate much.
We actually, when you think about it, we do corporate in every return we do, but it's the sole proprietorship version.
Yeah, but I haven't seen very many C Corps or S Corps, and when they come my way, I have to send them away because we don't do them.
Well, we have the ability in some cases, but it's only at select offices. The only reason is we have to pick the offices that we want to have the special corporate software to do all of the other forms. The main difference is we don't have, our software is really designed for a 1040.
Right.
And those immediate forms associated with a 1040, which are, in a sense, the stuff for a sole proprietorship.
Right.
For all the other ones, like a 1065 or the 1120, whatever it may be, don't exist in our software.
I see.
And so we can, and I've been pushing them to, because it costs us like $1,000 at every location to put the software in. And
Well,
so,
I think that we should
probably
have
not
somewhere.
necessarily at a Walmart location, but at a
Yeah,
store.
right. Oh, well, my Sherwood people, you know, I got maybe 5 different inquiries at least from
Mhm.
people with C corps and S corps.
Well, and see, and I've been pushing them. I've told them all along, I need, like, throughout the district, I need at least probably 4 locations that I would like to set up at the storefronts, you know, everything from Albany, Stark, you know, something like the Beaverton, and I'm trying, you know, something like at least, and now that we've added Salem, it would be kind of like Salem, Albany, Beaverton, and Stark, to have the corporate software as well, because then when one comes in, we can handle it. Because the other thing we're branching off into that we're pushing for is one of the things that doesn't get done a whole lot. And actually, I'm going to pause this because it's outside of what we're kind of what we were talking about here. Let me just do this. There we go. So,
So then do you want us to open it?
yeah, go ahead and open it. Now, what I've done there is I've kind of, I'm going to try to do this for each different type of business entity for you as we go through. The sole proprietorship, because it's basically an individual, has a lot of the basic stuff as a sole proprietorship really is an individual, okay, in that sense. So you guys have a lot of the individual stuff, so I'm not going to include a lot of the guidelines, because the sole proprietorship, you've got already most of it. But what I've done is there, especially in the partnership, I've included a lot of the IRS publications that are associated with a partnership that guides you through it. There's also one at the bottom in those forms that says Partnership IRS Questions and Answers. It's just a Word document. And what it does is it has some general questions that the IRS has seen in the past that are questions in regards to the taxes, which will help kind of answer some questions that come up. Now, they're not by far anything that they involve a lot of the returns and how things work, because we're getting into a little more detail. So you guys are going to start needing the forms that we're using. Now you'll see in them, these are right from the IRS. So as you know, if it's got an F in front of it, it's the actual form and the form number. If it's got an I and then the number, it's the actual instruction manual for it, the instruction sheet from it from the IRS. And if it's got the P and then the number, it's the actual publication number. Under that, the Pub 541 is under the partnership. That is one of the ones this is one I really kind of need you to read. It's not very long. I mean, it'll take a little bit. It's 16 pages. But that is really, it's dry, I understand. It's not exactly the most exciting information, but it is really the IRS information about a partnership. And it's one of those sections that it does explain a partnership in pretty good detail, and it explains how the IRS does view it. And it's 16 pages. Hopefully it shouldn't take you too long to read. I know it's boring, but it really is information you do have to know. And we are going to go through it. So Some of the others, the most important ones, I've got the forms on there. You can see I've got it up here on the share on the screen. The 1040 and the C and the CEZ, as you know, these are your profit and loss from a business, the Schedule C. The Schedule SE, your self-employment, and the 1040 estimated tax. Now, we're going to cover these later on, specifically how to do the sequence of business accounting. So I understand that I'm not asking you to know these in detail yet, because I realize that would be a whole lot to go, hey, here's a whole stack of forms. Go memorize what we use the forms for. I would never expect that of you. Okay. I do want you to read through that, the P541, which is the partnership. Then it's in what I sent you. And let me see, double check under the sole proprietorship. Well, those are actually just the forms, because we're going to be going over these. Okay, Neil, just keep, they just haven't come through the computer yet because they're in the chat.
Yeah, in the chat room.
Okay.
I don't see any.
All
Did
right.
they receive it, Garrett and Sheila?
There's
Yeah.
Naomi. There are different type of files.
They're a zip file.
Yeah.
So you have, so you have to click on them and then they'll open up.
Yeah, but if she doesn't have zip file on her computer, then is it going to?
That is true. That is true. I can actually, let me see if it'll send it this way. I don't know if it'll send it as this.
Or maybe by internet is
Yeah.
login.
No, I think it's the file issue.
It might be here. See, it won't let me send the open file. It'll only let me send the zip file.
Yeah. So, well, maybe you can like set up a computer.
Yeah, Naomi. They'll all be on the website too. But and Naomi, in your case, you can get them from me. So, and there I sent the two important files individually. Because that's the partnership file. And let me do one other one here. I'm going to send you, I think that's what I want. Let's see. Yeah. In that case, what I'm going to do is I'm going to send you a couple of extra ones for you guys.
Now, the
We're going to need to
partnership
know.
questions, Ryan, is that something that you already sent as part of the zip file?
Yeah, I did. These are the last one's the only one that 505 is not in the zip file. The other two I just sent individually for Naomi,
All right, thank you.
she could get them if.
Mm-hmm.
Yeah, I got it.
Okay, and then those last two, the 505 and the 535.
Mm-hmm.
The first one is in PDF file. The second one is Word. Yeah.
A Word document, right? You guys don't need to know that until later on. And I'm going to need to know that later on. I'm looking for a couple of important ones so you guys get some concepts. You don't need to know basis of assets yet, because I hate doing that too. There we go.
We went over basis.
Yeah, basis I know. And you guys have it, and it's really the same under business as it is under under an individual. But I'm looking here. Here we go. That's what I was looking for. Here's one too. This 583 is showing about starting and keeping business records because that says about starting the businesses. And then an important one is that last one I sent. The 925 is about pass-through and about at risk. And that's one of the things we were talking about, how they talk to each other. There you go. You got it. We don't need to do that one yet. I don't think we need to worry about this one yet either.
505, I already downloaded it.
Okay.
And
Right.
583.
Perfect.
Is it the same? Yeah.
Yeah, those are the, because these are the IRS publications. Really the one that's important, I think, right now is kind of the 925, because that's actually explaining pass-through and at risk. All right. So,
You read the 925, Ryan?
yes, I would suggest please the 925, because that explains a lot of the pass-through information and how a pass-through works, what gets passed through. And again, trust me, I do understand that that's probably one of the most boring things ever to read. Mm-hmm. And I'm sorry about that. It's, you know, kind of like watching paint dry. But it really is passive activities, estates, things like that too. Okay, let me, I'm looking for one other one. I had one about more about, because that's mainly the at-risk rules and things like that too. All right. Oh, that's the passive. Did I get the wrong one? Yeah, that's the one I want. Okay. All right. So those are the ones I'd really kind of like you to take a look at, go through them a little bit. And then tomorrow, we're going to get into the detail on the structure, or not tomorrow, on Friday. I've tried to explain a little bit about the business, how they talk to each other now. I mean, you guys, here's kind of a recap. We've talked about what a business entity is. So you have an understanding of what a business entity actually exists as, what it can do. Now you understand a little bit more about how they can talk to each other, how they can be stacked. I haven't gone into details about it, I know. And you know, that's like when you say, well, does an LLC do this? And does, I haven't covered that yet, really. But do you guys have a better understanding now, a little bit about how the businesses can now talk to each other? How the Spider-Man method of business. You know, it's like, do you guys understand that a little bit better now?
Yes.
That's because that's what I really wanted. I really want you to, because if you understand it, it'll be a whole lot easier to memorize the technical stuff, because that's what we're going to get into next, unfortunately. You have to understand what's behind it to understand the technical. So this is a question time now for you about the communications of the sole proprietorship, how it works, and the partnerships, how they work. You saw that they talk differently. A partnership, you know, all the parts, the C Corp and the S Corp all talk more or less the same thing as the parts of a sole proprietorship, like they were each a sole proprietorship. That's how they talk, in a sense, to each other. They're another little node. It's the Spider-Man again. Okay. But do you guys have really a better understanding of now how they can talk and how they can work together? Because that's what I was really looking for.
Yeah.
Sheila, are we good?
Oh, yeah.
Because like I said, I want you guys to understand it. Because next I'm going to make you start memorizing things. That's why I start giving you the forms. Because now comes the harder part. Okay. Sorry, it gets harder at this point. Okay. Naomi, you good?
Yes, but can you give us the copy of that presentation with the forms?
Oh, yeah. Yeah, I can do that. No problem. As a matter of fact, I will give you, you know what I'm going to do for you? Well, actually, Naomi, if you download that zip file, and if you
Yes.
can, is what I'm saying, is if you can. If not, I will just give you them all. I'll give you all the files, all the forms. I'll just give you a drive when we get together later on,
Okay.
and I'll just give you all the forms because I've got them all broken down in files based on what they are. Now, C Corp, S Corp, all the files associated with them is what I've been putting together for you guys. All right. I'm trying to make it as easy as possible because I know each one. Think about it this way. So far, you've had the 1040 version of life.
Yes.
Okay. That's all folder 1. Sole proprietorship 1040. Now I'm going to throw out at you partnership 1065, C Corp, it's 1120, and then S Corp 1120S. You've got the nonprofit 990. I'm trying to think of all the others I have forgotten now, but you you understand that now. You've got this one. Now I'm about to throw like 10 other ones at you. They all have their own form and all their own rules. But again, and here's the important thing, so you don't get scared by that. Remember that 1040 guy? The 1041 that you know all about?
Yep.
These guys are just different versions of the same 1040. Okay? That's all they really are if you think about it. They got an income, they got an expense, they got a mom and dad, they got a birthday. They just got a different form number. But you're going to treat it more or less the same way. All
So
right?
there's a typo, just to pass this on to the other people in here.
What's that?
On your business unit, business entities, pub 1653 is actually 16.
Bless you.
Sorry about that. It's actually pub 1635.
1635. I typed
Yeah,
it
because
back.
I looked it up today before class,
Oh, okay.
and I kept not coming up. So then I just typed in understanding your EIN, and it popped up.
There you go.
With
It's 1635. Okay.
So that's a typo on your.
Thank you,
that,
Garrett.
but,
I did not
yeah.
catch that. Thank you. I'll get that fixed.
Well, that's just so if they're looking for it themselves, they can find
Yeah.
it. Because all that stuff's on the IRS website. So, I mean, I looked to see if you had them downloaded today, and you didn't. So I went on, pulled some just so I could look at them, have
Cool.
them before class. So
Thank you for catching that, Garrett. I missed it. So
sure, that happens. I transpose numbers myself.
I transposed a
sometimes,
number. Okay.
Yeah.
Cool. All right. Well, like I said, I'm glad you caught that. That fixes that one.
Okay.
But like I said, don't be afraid of these guys. Okay. Do you guys understand that a C corp is just a 1040 with some changes? An S corp is a 1040 with some changes. An LLC is a 1040 with some changes. They all have a different form number, but they're all the same one. Just they have a different form number, but they're handled really the same way. They have their income, they have their expenses, they have their credits, they have their deductions.
IRS also has instructions on how to do just about every form they put out also.
Yes,
So you
and
just have
that's
to look for the instruction book.
and if you guys look in the zip file there, by the way, the zip file, Garrett, did you get it and open it?
I didn't see a zip file on the website. That's why I went to
No, it's not. I just put it in chat earlier.
Oh yeah, I opened the zip file. Yeah, I got those open. Yeah.
They have the information files with them. You'll see like it says the 1065, and it'll say F 1065, and it'll say I 1065. The F is the form, the I is the instruction manual for it.
Okay, great. Yeah.
Okay, because I want you guys to have all the information. And as a matter of fact, I think there's another thing I'm going to give you guys. It'll take me a little time to make it, but I'm going to give you a little PowerPoint presentation that's just not as interactive. It's just a straight through thing kind of explaining what we go through in a short version. Okay. I'm hoping that'll help. I'm just trying to give it to you as many ways as possible. Okay? All right. Sheila, questions. Guys, any questions you have? I mean, any questions you have. Oh, here, by the way, let me do this too. As long as you guys have. There's that one. And there's this one. Now, again, remember, this is mainly we were just talking about it, so there's not much to this presentation. But I want that way you guys have the presentations too. I just put them in there. That help?
Mhm.
There you go. You got the presentations as well. So this is the time for questions, guys. I've explained our Spider-Man business. You know what I'm going to do? I think I'm going to put that as a poster in the back of the office. We do Spider-Man business. So,
I love to do businesses. I really do.
I cannot help it. I love that was like, Garrett, that was the coolest thing. I was like, when you said it, I was like, it looks like a spider web. And I go, it is. I was like, it's the Spider-Man method of business. So, well, if you guys saw it, there's a reason that actually that would be so cool too. And here's, well, let me share this with you. And again, I'm just going to stop the recording here because this is not really anything associated with what we're doing.